The job market tanked, and next week we'll decide the future of stocks, gold, crypto, everything related with dollars. And we'll be discussing about that and what happened in last week and what could happen in the next week. In terms of that, the European Central Bank, inflation, Japan's crisis, everything we should know about, we'll be discussing here, and we'll predict what's gonna happen for the upcoming week so we can trade fundamentally. So what happened this week? This week was so crucial. The NFP data, or the major economic data that outlines the strengths of the labor market, which is closely watched by the interest rate setters of the Federal Reserve of the United States, has been dropped. And boy, there was a missing. It was way below expectation, making a shockwave through the system. The labor market is in desperate help. And not just that, the Eurozone was in crisis. France specifically had in crisis of politics, making the Euro fell heavy on the Monday and continue its effect on throughout the session of this week, basically, we can say. And not just that, Trump is trying to fire a Fed member of FOMC, one of the 12 members, Lisa Cook, and making dollar even weaker. In geopolitics and the uncertainty in the market is nothing but high right now. And Japanese GDP shrink more than expected. We were expecting 1% upwards, but it was shrinking in negatives, shockingly, making the Bank of Japan's decision really contradictory in a very particular situation, because they wanted to increase the interest rate they have. For decades it has been low, but the economy is not letting them have it, and I will be explaining that. So let's talk the first one, the NFP. The NFP came very, very bad and worse than expected, signaling the rate cut is a must. According to CME tool, there's 100% chance, at least 25 basis point. The rest is a split between 50 basis point and 25 basis point. But let me tell you something. In my previous video, I've predicted if this data came worse than expected, it's not a talk about 25 basis point. It's gonna be a talk about 50 basis point. And the prophecy came true. So the Federal Reserve is in a very particular situation, making the dollar weakness accelerating a lot faster than we can think of. And as a trade idea, I really recommend you to sell dollar against the major pairs. But there's a caveat, especially in the Eurozone, because Euro is gonna set its interest rate on the next week, and not about the interest week setting, because it's expected to be non-changed. The President Lagarde, or the President of the European Central Bank, is expected to talk and give a general direction of what could happen in the near future. That, my friend, is all the market is gonna price in, because 2% everybody is expecting, to be honest. And not just that, is she gonna acknowledge the policy divergence between the Federal Reserve Bank of Europe and the Federal Reserve of the United States? If this is shown clearly, or the President Lagarde is hawkish, saying we're not gonna cut any rates or nothing's gonna happen changefully, the dollar will fall significantly, because it's expected to cut interest rates, that's making the dollar weaker, and already priced higher and stable Eurozone will become stronger, not on interest rate divergence, more of interest real value divergence, because Eurozone is expected to have stability and America is having a bit of a crisis on the labor market, also on the inflation side. But this is not smooth as we think, because French has a very tough time and the politics is going outrageous, we can say. Due to that, Monday Euro fell significantly because of the politics of the confidence vote, making it ripple through the bond market, ripple through the news market, and everybody was talking about it. And if they cannot solve that for the next week, oh, there could be a bit of a trouble, putting that pressure on Euro side. But if that thing is resolved very quickly, that the Euro is gonna rally up very significantly. And the dollar will be very hit. The dollar will be weakened, and that will be very strong. So there is another thing we should talk about too. Trump is trying to fire Lisa Cook, and there have been legal troubles, making the USA Federal Reserve having that, unpredictable taste, because they should be politically independent, but Trump is challenging that, trying to influence everything they want, and that made the dollar really weaken. So if there's no way in chance they're gonna resolve this pretty quickly, but that will make dollar weaker. I repeat, that would make dollar weaker. Last, Japan wants to raise interest rate. It's well known, but they can't, because the economy is really weakened and it's showing the contraction on GDP second quarter. If the GDP is weakened, they cannot tighten the monetary policy, because if they tighten the monetary policy, an already free haven of money, people start borrowing, people start spending, the GDP will be instantly hit with the very bad number, and that would go back to the recession times of Japan, which they haven't recovered that much pretty quickly. So this is the fundamental. In short, dollar is very weakening because of the political and the interest rate decision and the weakening labor market. So what do we expect next week? Next week there will be very crucial data that shows inflation, and if the inflation data didn't surprise the market out of nowhere like the US labor data did, the rate cut is gonna be absolutely guaranteed. And this is my prediction. If the inflation data is very cool or cooler than expected, the talk will be 50 basis points of rate cut, not 25 basis points of rate cut. I will emphasize this very, very, very highly. But if the inflation report came hotter than expected, the market will wiggle around, but at the end of the day, 25 basis point is really sure, like assured thing. And that inflation data will be the determining factor for Trump's Trump's tariff inflationary pressure on the US consumer. So let's recap. If the inflation is cool, making the Fed room for a cut, making gold new highs, stock new highs, dollar weakening very, very significantly. But if the inflation came very hotter than expected, one thing leads to other, there will be a rate cut, but market will significantly reprice himself, making that volatile moment. As a trader, I love that. And if you got questions, please do let me know in the comments. I will do my best to respond. Till I see you next time, this is African Socrates. Don't forget to subscribe.